Gold. Have you ever wondered why a shiny metal dug from the earth has captivated humanity for thousands of years? From ancient kings to modern-day investors, gold has held unique properties symbolizing wealth, beauty, and power. In this video, we are going to look at how gold has historically been used in monetary systems through the gold standard, and why it still has value today. Beginning with the history of the gold standard, let's trace the story back to 1816, where the United Kingdom tied the pound to gold through the Coinage Act, with the government allowing people to swap paper notes for the precious metal 5 years later, launching the gold standard. Across the Atlantic Ocean, the US started with a gold and silver system in 1792, but the Coinage Act in 1873 formally shifted the focus just to gold. Now, when wars arise, things can change. When World War I began in 1914, Germany acted fast to adjust for a wartime economy. The Bank stopped exchanging notes for gold, needing cash for the war, being the first major country to break away from the gold standard. However, the UK also suspended gold convertibility later that year. Moving on another 30 years, near the end of World War II, the Bretton Woods Agreement rewrote the script. It was agreed that the US dollar was pegged at $35 per ounce of gold. Given that other currencies were linked to the US dollar, this indirectly linked many currencies to the value of the precious metal. Finally, following significant spending on the Vietnam War, gold reserves shrank. President Nixon decided in 1971 to exit the system where the dollar is linked to the value of gold, ending the gold standard in the US. But why does gold still have value today? If we look at the price of gold over the last 65 years, we can see the value of gold has increased since the end of the gold standard in the US in 1971, with the value of the commodity significantly increasing since 2020. Most economic theories highlight that prices go up when the supply is lower than demand. So let's start by looking at the supply of gold in the world economy. In present times, the majority of gold is extracted by mining the raw material from the earth. The US Geological Survey estimated that in 2023, around 3,000 tons of the metal was mined annually. The supply of gold is fairly predictable, and is extremely difficult to significantly increase the supply of gold. As money now is no longer on the gold standard for most countries, the amount of money available in a country's financial system tends to be determined by the central bank. As we have seen through the approach known as quantitative easing, central banks can print off new money to help stimulate the economy. Therefore, unlike gold, these banks are able to increase the supply of money significantly. On the demand side, the main driver of demand for gold is from jewellery, with nearly half of global demand coming from this sector. The resistance to tarnish and the historic perception of gold symbolising wealth makes it a desirable material in jewellery and decorations. In more modern times, gold is also being used by tech firms, given that it's an excellent conductor of electricity, while also being resistant to corrosion. With advances in AI and high-performing chips, the demand of gold could even increase further in this sector. Furthermore, central banks hold gold along with other currencies in their reserves, as it is a store of value that tends to offer protection in the event of economic chaos within the domestic economy. According to the World Gold Council, the US and Germany currently hold the largest amount of gold. However, emerging economies such as China and India are increasing their supply. If we compare the gold supplies for China and India in 2019 to 2024, we have seen a respective increase in their gold reserves by 17% and 38%. During that same period, the US and Germany's gold reserves have remained fairly flat. This demand from emerging markets is one of the reasons why the price of the precious metal has increased over the past 5 years. The rationale on why central banks hold gold can be the reason why many individuals or institutions purchase the metal, is that it tends to store its value in crisis. The fact that money conceptually only has value because the government of the country recognises it as their currency means that the value of that cash in your pocket can drop significantly when investors lose confidence in that economy. There are many events why investors lose confidence, such as wars, unaffordable government spending, and recessions. So in the time of a crisis, investors will look to protect their wealth using gold. To summarise, gold holds value as it's scarce, durable, and has been trusted for centuries to shield against economic storms. In a world of uncertainty, the shine of gold keeps it as one of the world's most desirable investments.